Welcome to the tutorial of bookkeeping, mga ka-students. Before we proceed on the topic about perpetual inventory system, let us first discuss what are the accounting cycle that we will use in perpetual. But before that, don't forget to like, share, and subscribe to our YouTube channel and click the notification bell for more upcoming videos. There are 10 steps in accounting cycle: identifying and analyzing, journalizing, posting, an adjusted trial balance, adjusting entries, adjusted trial balance or worksheet, financial statements, closing entries, post-closing trial balance, and reversing entries. This cycle will be used when you take bookkeeping exam. So now, let's begin. So this is the chart of accounts of Christie's merchandising, which serve as a guide where you could base your account title that you used when doing journalizing, and also the account number of each account titles, so that it would be easy for you to analyze what account title should use. And these are the transaction of the month that Christie's merchandising has made. So we bookkeepers are tasked to do the accounting cycle in order to recognize profit using perpetual inventory system. Now, I will show you how you will entry all the transaction that Christie's merchandising has made. So June 1, the owner invested 200,000 cash for the business. So debit, cash, credit, Christie's capital. June 2, purchase 15,000 cash for the equipment. Debit, equipment, credit, cash. Note that when you enter a transaction, you should put a gap on the credit side from the debit side. It should not be aligned. So for example, look at the cash and Christie's capital. They have a gap, right? So why does it need to have a gap? In order to determine that cash is in the debit side and Christie's capital is in the credit side. In June 2 transaction, so why do we need to credit the cash? So where does cash belong? And what is the nature of the cash? Is it on the debit side or credit side? So cash is an asset. And the nature of an asset is they are on the debit side. So in this transaction, we need to credit cash because we purchase equipment needed in our business. So meaning, nabawasan yung cash natin. June 2, purchased 20,000 merchandise on account from Levi Company. FOB shipping point term 2 of 10 and 30. So, this FOB shipping point term 2, 10, and 30 means that if you pay the whole amount within 10 days, you will have a discount of 2%. But for now, just neglect that muna. Just focus on how you will entry this transaction. So, as you notice, we did not use purchases as an account title, but instead, using merchandising inventory. So, this is one of the difference between perpetual and periodic. So, debit, merchandise inventory, credit, accounts payable. June 3, purchase office supplies for 500. So, debit, office supplies, credit, cash. Note that all increases and decreases in inventory such as purchases, freight in, purchase returns, and purchase discounts are recorded as merchandise inventory, and the cost of goods sold are also updated each time a sale or sales return is made. And at the end of this, we will not make a statement of cost of goods sold, not like in the periodic. So June 4, sold 17,000 of merchandise on account to Mikasa Company. So term 2, 10, and 30. Cost of merchandise 10,000. So debit accounts receivable, credit sales. And the other one, debit cost of goods sold, credit merchandise inventory. So in this transaction, we made a sale. It is still the same on how you will entry in periodic, but the difference is we must also enter here the cost of goods sold. So June 5, paid freight for March 4 sales, 200 pesos. So debit, freight out, credit, cash. So why is it freight out and not freight in? Because we made a sale. And if we pay freights, it is called freight out. In purchases, if we pay freights, it is called freight in. But freight in perpetual is not recognized, but instead it is a merchandise inventory. So 6. Receive memo for Levi Company for defective merchandise for 500 pesos. So debit, accounts payable, credit, merchandise inventory. 11. Paid Levi Company. So debit, accounts payable, credit, cash, and merchandise inventory. So this merchandise inventory is the purchase discount. 13. Receive the amount due from Mikasa Company for March 4 sales. So debit, cash, sales discount, credit, accounts receivable for the settlement of accounts. Purchase 16,000 of merchandise. Debit, merchandise inventory, credit, cash. Paid salaries of 2,000. So debit, salaries expense, credit, cash. Issued promissory note for 15,000 cash received from the bank borrowings. So debit, cash, credit, notes, payable. 17. Receive refund of 1,000 from purchased merchandise. So debit, cash, credit, merchandise, inventory. 18. Purchase 15,500 merchandise from Aaron Company, FOB shipping point for term 2, 10, and 30. So debit, merchandise inventory, credit, accounts payable. 20. Paid freight for 800 from June 18 transaction. So debit 800, merchandise inventory, credit, cash. So this is the freight in the periodic. Sold 18,000 merchandise. Cost of merchandise is 12,000. So debit, cash, credit, sales. And we have to recognize the cost of goods sold also. So debit, cost of goods sold, credit, merchandise, inventory. 26. Purchase 11,000 of merchandise. So debit, merchandise inventory, credit, cash. Paid Aaron Company of 10,500 on June 18 purchases. So no discounts on partial payment. So it is just a partial payment. So debit, accounts payable, credit, cash. Got cash from the business, 5,000. So we withdraw. Debit, Chris Jive drawing, credit, cash. 29. Paid return merchandise to customers from June 23 sales of 1,200. So debit, sales returns and allowances, credit, cash. So, and also the merchandise inventory and credit cost of goods sold. Sold 14,500 merchandise on account to Armin Company, FOB destination with terms of 2, 10, and 30. Cost of merchandise 9,000. So debit, accounts receivable, credit, sales. And cost of goods sold, debit, credit, merchandise, inventory. Paid salaries 2,000, utilities 600, advertising 2,000, rental expense 3,000. So the total of 7,600. So debit, salaries, rent, utilities, and advertising. Credit, cash. So we already done in journalizing. So next thing we do is posting. But before that, I will show you first the real form of journalizing when you do bookkeeping exam. So this is the right form on how you entry a transaction. Putting dates, putting a sentence on the last part of every entries of the transaction, and putting the account number of every account title that you used. Now let's do posting. In posting, the information from the journal are transferred to the ledger. So just like this, the cash. All of your transaction that involves cash can be seen in here. In posting, you will post the debit of your cash and the credit of your cash. And you also need to total every transaction. It can be addition or subtraction to your cash so that you can easily determine the remaining cash of the business. And it also applies to all the account title that you need to post in your ledger. So next is trial balance. How to make a trial balance? First, we do the header in the center. So on the first line, put the name of the company. The next line is its purpose. So the purpose of this is a trial balance. And lastly, the date with an introduction of as of. And then, let's proceed to the body. First, give a small space on the left side for the account number and the account titles. And lastly, the debit and the credit side. Then put the remaining balance of each account titles, whether debit or credit, and the total side of all debit and same as to credit. And if it is the same amount, then you are good to proceed to the next steps of accounting cycles. So that's all for this video, and thank you for watching. And please watch the next video.